Taking a look at today's interest rate markets, let's check in on the 10-year note futures today as they're realizing some strength here today. After a couple days of selling pressure and really several days over the last couple of weeks of downward momentum, we did see, at least for today, a little rally in the 10-year note futures right around the 135.14 level currently. Now, it is interesting to point out, today was an inside day. So what that means is that we did see the high from today, which was lower than yesterday's high, and the low from today, which was higher than yesterday's low. So the range was inside yesterday's range, and so a little bit less volatile session today when you look at the 10-year note futures. Some of the factors, I think, really you got to point to the Fed testimony this morning. Fed Chairman Powell testifying in front of Congress about rate policy moving forward and reiterating the fact that they expect to remain accommodative for an extended period of time, even with the most recent data points that were questioned. He still indicated that they plan to maintain that accommodative stance, and I think that's helping to support the bond market and the treasury markets as a whole, at least today, why we did see the middle of the curve at least find some renewed strength. And couple that with the equity market weakness that we did experience yesterday, some more this morning. Now the markets were able to fight back. But ultimately, I think, those two factors, but primarily the testimony being the big driver today within the 10-year note futures markets. Now, when you look at the yields, I do want to point out 136 basis points on that 10-year. So again, still holding below 140, but we tested it, pushed up close to it, 139, but then came off. And so once again, holding in the middle 130 level right now at 1.36 on the 10-year yield. The interesting point is, I think, that the 30-year did go out today. We did see the 30-year yield going out to 221 basis points, or 2.21%. And so therefore, when you look at the yield curve, we did see it actually steepen from the back end today. The selling pressure persisted today within the 30-year market, even though we did see the 10-year and some of the shorter dated durations treasuries find the ability to rally. The 30-year treasury market continued to sell off today, and we did see those yields push out to 221 basis points on the session.